Good day, everyone, and welcome to the Fiscal Philosophy YouTube channel. Today's discussion topic is none other than Amazon. Amazon, which is a stock I only recently started getting into. My goal was to hit 100 shares in my value account before the stock hit $200 per share again, and I managed to succeed in that goal with a cost basis of just under 180. And once again, we are butting up against the famed BEZOS wall. We're right up against that $200 price point, and it seems like it's just having difficulty breaking through that ceiling. Of course, this is a good bit up from where it was a couple weeks ago, and it has been fueled by, I think, the earnings results, which were a slight barely noticeable miss on revenue, but a big beat on earnings per share, meaning that bottom line do look good. So Amazon continues to have what I think is pretty healthy revenue growth. Now, it has definitely slowed down. I think this is one of the companies, in a way, similar to something like a PayPal, where it got a big boost during pandemic times. And then in the aftermath of that, the revenue sort of slowed down. And I think a lot of those revenue gains were gains that would have been inevitable anyway. It's just a lot of them got front loaded during that time, which, forced the business to adjust and expand maybe a little bit quicker than they could do in a super efficient way. But now that they have experienced that growth and they continue to grow, they do have, I think, a more sustainable growth level now where they can really focus on those efficiencies and those profitability levers we like to talk about so much. And also, I think as time goes on, less of this growth comes from e-commerce and more comes from AWS advertising and maybe soon pharmaceuticals, which they're getting into pretty heavily. I've seen many ads for the Amazon pharmacy segment, so I'm looking forward to seeing how that all plays out. But if they can maintain growth in this general area, those high single digits, low double digits of percentages, I think that's perfectly good. If a lot of that growth is coming from the higher margin AWS and advertising segments, which I think that's where the future of a lot of this revenue growth actually is, meaning a disproportionate amount of that will start to filter down towards the bottom line because those are higher margin segments than e-commerce. And once again, I have to look at the valuation here, okay? And the reason I focus on operating cash flow is that if not for Amazon's enormous capex, this would flow down to free cash flow. And if Amazon was at 18 times free cash flow, I don't think there's a person out there that wouldn't at least be stopping and looking and considering buying some. However, because of the continued very high level of capex, their free cash flow multiple looks stretched, while their operating cash flow multiple looks good, cheap even. Now, I'm one to more see the operating cash flow as like the representation of what you're actually getting, because eventually, as certain business segments mature to a sort of a plateau, the capex spent on those segments will undoubtedly start to wind down and become a smaller and smaller portion of revenue. So more and more of this operating cash flow will actually become free cash flow and or net income. So I'm perfectly happy to more evaluate the business in terms of a multiple of operating cash flow for those reasons. And at an 18.5 times, I think it's still relatively reasonable here. Granted, I'm happy that I got a chance to load up at cheaper prices than today's price, and I'm happy to hold and hope that it breaks through the BEZOS wall in the near future and to get all of the returns and benefits that will come from that. Now, speaking of things that are a good value, what I mean by value is you can get 8.1% bonus APY on uninvested cash if you use my exclusive link to sign up for a Moomoo account. And if you deposit $1,000, you'll get up to 15 free stocks. Now, I know that there are a lot of brokerages you can sign up for, but very few offer what Mumu does without charging any kind of a monthly fee or anything. You've got 100 different trading indicators that you can use to do your chart reading and your technical analysis. You've got bonus APY for the first 3 months on your uninvested cash. You've got free stocks, and you have very low margin interest rates, all without any kind of monthly fee. I think that it's at least worth taking a look. Please use my exclusive link. It really helps out the channel a lot. Now, back to the analyst estimates on Amazon. So analysts are mostly bullish on Amazon. This is one of those cases where more or less I generally agree with the consensus that it's a good deal. I would be more of a hold to light buy instead of a strong buy at the $200-ish level where we're at right now. I would have been a strong buy probably in the 180 and lower range for sure, though. And, the targets they have here are a high of 285, average 233, low 183. Personally, my sense of Amazon is somewhere in the 220 to 240 range probably is roughly appropriate. Whether the price actually goes there in the next 12 months is, of course, up to the market to decide based on how many people buy versus sell. But I get the sense that that's probably a roughly appropriate valuation for the level of growth that they have and the profitability levers they can pull. I think 285, while I would, as a stockholder, love for it to reach that price, I think that at that point, the valuation would be quite stretched, even if they have a really good end of 2024 and a really solid start to 2025. I still think 285 a share is probably a little bit high, to be perfectly honest with you. If you made it to the end, do me a favor and comment below letting me know if you have any Amazon, what your cost is, and how many shares you have. And if you agree with me that it's the best value of the Mag 7s right now, as it is the only Mag 7 I currently hold, so I have literally put my money where my mouth is on this. I know that you guys think of it not really as a traditional value play, however, I do still have plenty of cigar butts in my portfolio, so don't criticize me too hard. Also, make sure you're following me on the X platform at Mr. Macho Mog, joining Discord, link in the description, and checking out Cashflow Kings live every Saturday, 8 p.m. Eastern. Also, we're having a special election episode on Tuesday, November 5th, so make sure you're watching that and putting it on your calendar. Ladies and gentlemen, I want to wish you a wonderful Manic Monday. Take it easy.